Hello, Mortgage Matt here to discuss rural development loans and why you might choose one or not choose one. So, there are definitely a few advantages to using a rural development loan. Number one, outside of a VA loan, which very few people are eligible for, rural development is the only government backed zero down loan program. Now, it's always important to remember when you hear terms like zero down, we're only talking about no down payment on the mortgage. So if you're buying a home for $150,000, your loan amount will be for $150,000. There are always closing costs and escrow setup costs involved with getting a mortgage. So those are always separate from your down payment. Just like the other government loan programs, though, it is possible to have the seller pay for a portion at least of those costs for you to help you buy the home from them. Rural development, just like FHA, limits you to 6% of whatever your purchase price is going to be. So you hear those referred to as seller's concessions. So on a $100,000 house, that would be $6,000 maximum. However, it's really important to remember that that amount of money comes off of the seller's bottom line. So if you offer to purchase the home for $100,000 and they're paying $6,000 to help you buy it, they're only actually going to get $94,000. Well, it's important to you because if you're going up against another offer on the home at the exact same amount, and that other offers for $100,000, but without any seller's help, then that actually is more money for the seller on that. So you may consider compensating in some way by offering more to make sure that you are still competitive with your bid. And the reason I mention all of that is because over the last few years, since 2020, it's been so competitive for every home that in most cases, sellers' concessions are just not a reality in most markets right now. Rural development, like FHA, is also eligible to be used with a down payment assistance program. So if you don't have the ability to come up with that money for the closing costs and escrow setup, you could still put zero down on your mortgage, but then also use the down payment assistance to pay for those closing costs so that you don't have that out of pocket cost. The other big advantage to a rural development loan is they actually have the lowest mortgage insurance out of almost any government loan program. It's much less expensive compared to an FHA loan. So, whereas an FHA loan will generally have mortgage insurance of 0.55% for the year, a rural development loan has mortgage insurance of 0.35% per year. And they're the only program that reduces that over time. So with a rural development loan, it will automatically recast every 12 months so that what you pay in your mortgage insurance is 0.35% of whatever your remaining balance is. So as you go along and pay your mortgage down, your mortgage insurance is actually getting cheaper. With an FHA loan, your mortgage insurance never changes unless you were to put more than 10% down. Then FHA will allow your mortgage insurance to eventually one day drop off. However, it would be pretty unlikely for you to be putting more than 3.5% down on an FHA loan. Another advantage of rural development loans, which is also similar to an FHA loan, if your credit score is, say, a 620 versus somebody else's credit score who's a 720, lenders are not allowed to differentiate that and charge the 620 more based on their credit. So there are some drawbacks to a rural development loan. I would say number one is the fact that it is geographically limiting. Now, most people hear rural development and they think of it as it must be some remote area. It must be a farmhouse type home. In actuality, it just means that it's not the very densely populated areas of certain cities. So each of those will have a box around them that denotes where the cutoff is between the very highly populated areas and then where there's not as much population. So in most cases, you may think that, like for instance, Lansing, which is the capital of Michigan, you may think that you can't buy a home near there with a rural development loan. But in fact, just a little bit outside of town, in all of the suburban areas of Lansing, are all eligible for rural development. So the same goes for, say, the Flint area. There is a box around the city of Flint where it's most densely populated. And outside of that area, everything else is eligible. So all of the suburban areas are eligible. Probably the biggest drawback for a rural development loan, which is actually can be similar with an FHA and definitely similar with a VA loan, is not so much even anything that is true, but just the perception of them out in the marketplace. So, rural development is just not a extremely popular loan program, which is sad because it's really one of the best government-backed loan programs that there is. And in my opinion, comparatively to FHA, if you're eligible for a rural development loan, it is absolutely a better loan program than FHA for those that qualify for it. However, you're going to be more likely to run into a seller of a home or their real estate agent that don't know anything about rural development. And I just had this happen last week. It was January 2024 here. I had somebody that made an offer on a home, and then the listing agent called me to say, well, we've got another rural development loan that's having all kinds of problems, and we just don't know about this rural development loan. Well, the problems that they were having had nothing to do with our borrower, and yet it kept them from getting their offer accepted. Now, you can't really be too upset about that fact. It's just what it is. We deal with misinformation in the market all the time. So that has to be a consideration when you get into really tough markets. You may have to strive as hard as you can to get to that conventional loan level for no other reason than it's the loan program that people know about.